Welcome to the Deep Dive. We're taking you straight inside the latest earnings calls, and today we're looking at Nextdoor. You know, the neighborhood social platform, ticker NXDR.
That's right.
We're tearing into their Q2 2025 results. And the first thing to note is, well, the market really liked what it heard. Shares popped, over 13% right after the announcement?
Yeah, big jump. And that reaction, it tells you a lot. For a company that's been, let's face it, in turnaround mode for a while now, this quarter felt different. It wasn't just about hitting some numbers. Management really pushed this idea that the operational reset, it's finally clicking. They're linking the financial discipline with a major product shift.
Okay, let's unpack this then. We've got the results, the cost-cutting piece, and this refounding product vision they keep talking about. Maybe start with the quick wins. What were the headline numbers that got the market so excited?
Sure. So it was a solid beat. Really driven by better execution, it seems. Revenue landed at $65.1 million, which was, comfortably ahead of the $60.3 million consensus. That's about 3% growth year over year.
Yeah.
But honestly, the top line wasn't the main event here.
Right. It's usually the margins in these turnaround stories. What did that look like?
Exactly. The efficiency gains, that was the real core of the positive surprise. Adjusted EBITDA, it was just a small loss, only $2 million.
Just $2 million, wow.
Yeah, I mean, that's a huge improvement. It works out to something like a 600 basis point margin gain compared to Q2 last year. And like you said, for a company trying to hit break even, stopping the cash bleed is job number one, right?
Absolutely.
And they really nailed that this quarter.
Okay, so if we look under the hood a bit, what's actually driving the revenue now? Because Nextdoor's ad mix has always been, a bit complex.
Yeah, it's about scalability now.
Yeah.
And that's where they seem to be making strides. The main engine is their self-serve ad channel, for small local businesses.
Right, the SMBs.
That channel grew 27% year over year. 27%.
That's strong.
And it's now making up almost 60% of their total revenue. And this is like a really critical shift because self-serve platforms, they just have better margins inherently. They unlock that operating leverage.
Makes sense. More automation, less direct sales cost. But you still need the eyeballs, right? You need the users.
Yeah.
What did the top of the funnel look like? Are people still signing up?
Platform weekly active users, the WAU metric they use, it grew 1% year over year, came in at 21.8 million.
Okay, so steady. Not exactly explosive growth there.
Steady is the word. Modest growth. I think the message here is, look, they aren't rapidly accelerating user numbers yet, but, and this is key, they are getting way better at making money from the users they do have.
Right. Monetization efficiency.
Exactly. And often that's what comes first before you see margins really expand sustainably.
Okay, that strong performance, that efficiency gain, it naturally leads us into the operational discipline piece. Because, in a turnaround, the balance sheet, the cash flow, arguably more critical than just chasing revenue growth.
Totally agree.
So let's talk about the war chest they've built to actually fund this whole pivot.
Yeah, and the balance sheet is, it's rock solid. That gives them huge flexibility. They ended Q2 with $413 million in cash, equivalents, and marketable securities, and importantly, zero debt.
Zero debt. That's always good to hear.
Absolutely. And on top of that, they generated positive operating cash flow again, $3 million this quarter. That makes it the third consecutive quarter they've done that.
3 in a row, okay.
Yeah, and managing positive operating cash while you're still investing heavily in changing the product, that's a big credibility marker for investors,
Definitely. So that liquidity, that cash pile, it gives them the room to execute on this cost reset they announced. They talked about a workforce restructuring, shaving off about $30 million in annual costs.
That's the plan, yeah. Around $30 million in annualized operating expenses.
But are they just banking those savings to make the numbers look good short term? Or is there a plan for that cash?
Well, that's the key nuance, isn't it? And management was pretty clear. They aren't just cutting costs for the sake of hitting a margin target this quarter. They explicitly said they plan to reinvest a, quote, significant portion of that $30 million.
Reinvest where?
Back into strategic stuff. Primarily R&D, core product development. So they're basically trying to recycle inefficient spending into things that could drive long-term growth, cutting fat to build muscle, basically.
Okay, that makes sense. And that focus, presumably, shows up in their productivity numbers. They highlighted some internal data points, didn't they?
They did, yeah. If you look at revenue per employee, it's up by a pretty staggering 58% over just the last 2 years.
58%, wow.
Yeah, and that jump lines up almost perfectly with nearly 30 percentage points of adjusted EBITDA margin improvement over that same time frame. So they've streamlined things, focused capital and effort. It seems to be working.
It sounds promising, disciplined. But given Nextdoor's, let's say, history, what's the big execution risk here? Where does this potentially fall down?
I mean, the biggest risk is always the product pivot itself, isn't it? They're getting efficient, yes. But if all this investment they're planning now, if it doesn't actually move the needle on user engagement, if WAU growth just stalls out.
Then they run out of levers to pull.
Exactly. You can only cut costs so far. This pivot has to be about making the platform genuinely more useful, more indispensable, not just cheaper to run.
Which brings us right to that strategic shift they're hammering home. The new Nextdoor, they use this theme, refounding, pivoting from, reactive, episodic use.
Right, like checking when something weird happens.
To indispensable daily habituation. What does that actually mean in plain English?
Think about it like this. The old Nextdoor, maybe you check it, like you said, when your package got swiped or you heard sirens. Episodic.
Yeah.
The new goal is to make it something you glance at every morning. Like you might check, I don't know, your local news website or a national news app. They want curated, useful info right there. They talk about increasing signal density.
Signal density, what does that mean? Fewer pictures of lost cats, more actual useful stuff.
Pretty much, yeah. More high-quality, high-utility content in the feed. Stuff that actually helps you navigate your neighborhood or know what's going on. If they can do that, the platform becomes stickier, more useful daily.
And that presumably helps monetization.
Absolutely. Because advertisers want to be where users are engaged regularly with meaningful content, not just, scrolling past random posts.
Okay, so they laid out 3 main product pillars for this shift. Let's break those down. Pillar 1 was content curation, right? Local news.
Yeah, local news. They're pulling in content from over 3,500 publishers now, trusted sources, reaching something like 77% of U.S. cities.
Okay.
And the goal is squarely driving that daily habit. Early signs look decent, they said. News content is maybe 5% of the feed volume, but over half the users who see it are engaging with it. So it seems like quality engagement.
Interesting. Pillar 2 sounded more like reinforcing their original value prop, the real-time alerts.
Right. This is where they lean into being a critical utility, not just social. They've done deals with data providers, Samdesk, the weather company, to push out critical geo-targeted info. Think fires, power outages, severe weather alerts, right to the phones of affected users. This is the stuff that makes the platform feel indispensable during actual local events, builds trust.
And the third pillar, this sounds like the most ambitious one, AI-powered Faves.
Yeah, Faves. It's basically a conversational local AI assistant. The idea is you could ask Nextdoor, like, hey, which local plumber is reliable and open right now? And it would give you a trusted answer based on all the historical local knowledge shared on the platform. It turns searching for local info into more of an intent-rich conversation. It's in beta now, 6 U.S. markets, aiming for a broader rollout this fall.
Okay, this all sounds good for the user experience, potentially, but connected back to the money, how do these changes actually help advertisers?
Well, it's kind of a virtuous cycle, right? First, just a better user experience means people stick around longer, come back more often. CMOs want that.
Sure, time spent.
Exactly. But second, these new features, they create better, more targeted ad surfaces. Think about alerts or phase. If someone's searching for a plumber or reacting to a weather alert, their intent is super high right then.
High intent moments.
Precisely.
Yeah.
That allows for more relevant, potentially higher priced, targeted advertising. It's not just banner ads in a random feed anymore.
And on the back end, technically, are they ready to handle more sophisticated ad buys? Because that was a criticism before.
Yeah, they seem to be making real progress on the ad tech stack finally. The supply-side platform, the SSP integration, that's done. That helps them sell their ad space automatically.
Okay.
But crucially, they're on track to finish their demand-side platform, or DSP integration, before the end of the year.
And the DSP is what the big agencies use, right?
Exactly. That's how large advertisers buy ads programmatically, at scale, across lots of different sites. Getting that DSP integration done is vital if they want to tap into those big automated ad budgets from national brands. It lets them play with the big boys, so to speak.
Okay, so the tech is catching up. All this execution, this discipline, this product pivot, it brings us to the guidance,
Right.
which you could argue was the real knockout punch that cemented investor confidence.
Yeah, the clarity here was probably the biggest positive surprise.
What's the path to profitability they laid out?
So they gave specific timelines, which is huge. They guided to hitting quarterly adjusted EBITDA breakeven in Q4 of 2025, so just over a year away.
Quarterly breakeven Q4 25. Okay.
And then looking further out, they're targeting full-year adjusted EBITDA breakeven for the fiscal year 2026.
Wow.
That completely changes the conversation, doesn't it? It goes from if they survive to when they become profitable.
That is super specific guidance, and it feels more credible now, maybe with the $30 million in cost cuts backing it up. What about the near term? What's the outlook for Q3?
Right. The Q3 outlook kind of reflects that they're investing now before all the savings fully hit the P&L. They guided Q3 revenue to around $66 million.
Okay, slight sequential growth.
Yeah. And an adjusted EBITDA loss of about $5 million. But that excludes the one-time restructuring charges. So consistent with the strategy, take a bit of a margin hit now to make sure these new features like Faves and alerts really scale well this fall.
Got it. Invest now for the payoff later. We should also briefly mention the leadership changes. CFO Matt Anderson is stepping down.
That's right. Framed is just aligning with the next phase. But interestingly, at the same time, they appointed Craig Lasowski as president of products.
Ah, elevating the product role.
Exactly. It signals where the strategic priority lies now. Product execution is clearly the #1 value driver they're focused on for the next couple of years, and the leadership structure now reflects that.
Okay, and just connecting this back to the market reaction again, that almost 14% jump. It happened in what's generally been a pretty favorable environment for digital ads, right?
Absolutely. You look at the sector ETF, XLC, communication services, it's up, what, around 24% over the last 12 months? So digital advertising has been strong overall.
So the rising tide lifts all boats?
To some extent, yeah. The backdrop is definitely helping. But Nextdoor's move, the size of it, suggests it's more than just riding the wave. It signals maybe they're finally starting to execute internally, capture some share, and convince the market their specific plan is working.
Okay, so let's crystallize the setup here as we see it. You've got a massive cash balance, $413 million, zero debt, proven operational discipline now, with positive cash flow, a clear strategic product pivot underway, and crucially, a credible management-backed timeline to quarterly profitability in Q4 2025.
Right.
The stock's still trading at what you might call depressed turnaround story multiples, but if they hit that Q4 target, the potential for multiple expansion seems, well, pretty significant.
Definitely. The fundamentals seem to be aligning.
Yeah.
Which naturally leads us to thinking about potential ways to express a view here.
Exactly. So let's shift gears. Time for our This Is Not Financial Advice segment. We're going to pitch an outrageous but plausible trade idea based on everything we've just discussed. And let me stress again for everyone listening, this is purely for entertainment, for educational illustration, absolutely not financial advice. Do your own homework.
Got it. Disclaimer delivered. So what's the outrageous but plausible idea?
Okay, so this is a highly directional, pretty aggressive bet. It's a bet on speed, really. And on that narrative shift we talked about, the core thesis is that the Q4 2025 break-even target, they don't just hit it, they hit it early or they blow past it.
Okay. Driven by what?
Driven by faster than expected monetization of these new features, the alerts, the Faves, as they roll out nationally this fall and into next year.
Right. So if the stock is currently depressed, but the potential upside if they execute is big.
Yeah.
How do you maximize leverage on that potential re-rating? You wouldn't just buy the stock.
Well, the trade idea is, yes, you go long NXDR equity, but you significantly overweight the bet using deep out-of-the-money call options, maybe expiring sometime in early 2026 after that Q4 25 target date.
Ah, the leveraged option play.
Exactly. We're using calls because this isn't a bet on like incremental 10% growth. It's a bet on a fundamental, potentially rapid re-rating of the entire company's valuation multiple if they prove profitability.
And what's the specific catalyst you're betting on that makes those cheap, out-of-the-money options suddenly valuable?
You're betting that the Q3 execution we see this fall, the successful rollout of Faves, maybe new ad formats launching into the alerts feed, and critically, getting that DSP integration switched on.
Right, tapping into the big ad budgets.
All that stuff combines to catalyze two things in Q4. A reacceleration in WAU growth, maybe modest but noticeable, and importantly, a spike in the yield they get from self-serve ads. Much faster, much stronger than what seems implied by the current, maybe conservative Q3 guidance.
So the bet is Q3 sets up a Q4 surprise.
Essentially, yes. If NXDR hits quarterly break-even in Q4 25, maybe even shows a small profit, the story flips overnight. It goes from turnaround still in progress to profitable growth lever is here. That could justify an immediate massive step up in the valuation multiple. It's definitely an aggressive bet on management executing ahead of schedule.
Got it. High risk, potentially high reward if the catalysts align just right.
Exactly. Okay, so let's bring it home. To recap the core takeaway from this deep dive on Nextdoor's Q2, they've clearly established strong financial discipline that's backed by a huge cash reserve, zero debt, and a strategic cost reset that's funding investment.
Right.
They've articulated a major product pivot, local news, critical alerts, AI faves, aiming to shift the platform toward indispensable daily utility.
Making it stickier.
And most importantly for the market right now, they've given a credible, clear timeline to quarterly break-even Q4 2025, supported by concrete operational changes like the ad tech upgrades.
Yeah, the market definitely bought the story this quarter because the plan finally feels transparent, achievable. But, now the focus shifts entirely. It's all about execution from here on out. The proof is going to be in sustained, measurable improvements in engagement in those WAUs.
Exactly. The plan sounds good, the discipline is there, but the ultimate value rests on the user base. So here's the final thought for you to chew on. Given the positive signs they mentioned, like NPS improving and this clear strategic shift, how quickly will these new Nextdoor features actually translate into that acceleration in weekly active users that's needed to really justify the long-term growth story?
Or will the improved monetization just kind of mask continued slow user growth for a while?
That's the question. We'll definitely be watching those user metrics very closely over the next couple of quarters. Thanks for tuning into this deep dive.